Welcome back to Instables, everyone. So again, going over my daily plan on exactly how I plan on playing into the SPY. Again, to recap on the week, again, looking at the weekly chart here, again, closing the week off with the doji candle here just above our 20 weekly moving average, looking to see if we do continue to respect our 20 or if we will drop down back below our 20 since our 20 is still below our 50, or will we start to get momentum with our 20 weekly moving average starting to point up here and then continue on above our channel here. I'm going to go over exactly what we're looking for here going into next week. Again, next week we have FOMC Fed minutes. That very much is going to predicate exactly what we're anticipating leading into our next Fed rate hike in December. So again, next week's Fed minutes on Wednesday is going to be extremely key, so keep that in mind. Now, before I jump into this, if you guys can do me a huge favor, smash that like button if you find this video useful at all. Hit subscribe if you want to see my daily plan on exactly how I plan on playing into the market every single day. We go over candle structure, overall strength levels, and any key indicators that we need to be focused on. And again, if you are a day trader or you are looking for very volatile breakouts that we mention every single day in the Instables, and again, we mention any breakout that is worth looking at throughout the day, go to instables.com in the description below, and you will never miss a breakout alert today again. So jumping into the S&P 500 with you guys, again, recapping on the week, again, closing our weekly candle here as we are sitting on a Friday. As you guys can see, sitting on a doji candle. This is an indecisive candle after, again, our decrease in CPI. So our question is, are we on a healthy pullback, respecting our 20 weekly moving average here for that possible continuation on higher? And again, looking at our weekly divergence that we did mention again a week ago, on that possible continuation on higher is exactly what's happening here. As you guys can see, we have our EMA lines crossing up here on the weekly chart. So again, looking to see if we will continue on with our EMA lines crossing up here. Will we get our EMA lines to cross above the median or MACD here, which will give us a rally in the market? So again, we're going to keep that on watch. Again, looking for that possible continuation. Now jumping over to the daily chart here, again, similar to the weekly chart, we are looking to see if we continue to respect our 20-day moving average versus our 20 weekly moving average. So again, a very key point here where we are trying to respect specific levels here so that way we can get that possible bullish candle structure here above our channel here. So again, keeping that on watch. If we continue to respect our 20-day and our 20 weekly moving average leading into next week, we possibly close on a bullish candle setup on a weekly chart, then we could possibly continue on higher here above our channel here. So we'll see exactly how that plays out. And now as far as looking at our overall strength here, as you guys can see on the MACD, again, we have been decreasing in buy pressure for the last few days. We did mention that, again, on a pullback, very much showing us that we are on a pullback since we have our EMA line still pointing up above the median of MACD. We are not pointing down here. We are not curling down here. We will see if we start to curl down, if we possibly have a cool down, maybe leading into FOMC. We have a possible cross here, as we did have, again, a possible cross at this point, but we did not cross lower. We did continue bullish. So going into next week's FOMC meeting on Wednesday, we would assume that there would be a possible test here and possibly continue on higher if, again, our FOMC meeting is bullish and the Feds do mention a possible pause in rates and possible decrease in rates. Again, a lot of Feds have been mentioning that. We'll see if they do mention that on Wednesday's FOMC Fed minutes. Now, lastly, looking at the RSI, again, we have been watching our relative strength to show us if we do have room to run to the upside. As you guys can see, again, we have been pointing down. Again, we had lower lows, showing us that we were on a cool down. However, we are above the median of our RSI here, showing us that we still could possibly continue on higher. We want to see if we can break continue our highs here, and then we would have that possible narrative of breaking into overbought territory here. So again, we are not in overbought territory, so that does give us room to run to the upside here. We'll see exactly what happens if we continue on with this decrease in buy pressure on the daily chart, or if we continue on with that decrease in sell pressure on the weekly chart. We'll see exactly what happens leading into next Wednesday's FOMC meeting. Now, again, with that said, if you guys are day traders, if you guys happen to be looking for major volatile breakouts, we mention them every single day in the Instables room. Any breakout that is worth looking at throughout the day, we mentioned in the Instables room. Go to instables.com in the description below. And only for $15 a month, you guys will never miss a breakout alert today again. And again, all of you Instables, I appreciate everyone. You guys, hope you guys do have a blessed weekend. I'm going to go over the SPX tomorrow, the SPY on Sunday as usual. And again, much love to everyone. You guys, God bless you guys. And again, if you guys do like this video, it does help the channel grow, and I do appreciate it very much. And again, God bless you all, and I'll see you guys in the next video.